Welcome back. And where are we in the cycle? Where are we in the Bitcoin journey? Well, Michael Saylor was just asked recently on Bloomberg, would he ever sell the Bitcoin and take profits out? And his response is not something that we should be too surprised at. It's basically that he's going to be continuing to buy the top forever. But meanwhile, while the whole idea of why he's buying Bitcoin in the grand scheme and in the long term is probably going to work out, it is important to understand where we are in the debt issuance, right? Because the whole play on Bitcoin is buying Bitcoin because it's going to be ever appreciating while the dollar continues to depreciate. And I think that's very clear now with the fact that they're spending more money, even though they wanted to cut spending. The national debt is now $37.1 trillion. Just to give you guys some context, Dr. Evil wanted $1 million. That wasn't enough. $1 billion. We're at $37.1 trillion. And this is going to continue to increase. When I started this channel in 2018, okay, less than a decade ago, the national debt was at $19 trillion. And so we've doubled. It took the country 250 something years to get to $19 trillion in debt. And in just the last less than one decade, we've doubled that number. This is incredible. And this is the play on Bitcoin, right? Getting rid of dollars and buying Bitcoin. But here's the deal. The 4-year cycle is not done. Contrary to the bulls' belief that, we're never going to have a bear market again, that the bull market is going to continue forever, and the 4-year cycle's done, it's really not. And we're kind of in line with where the cycle is and where the cycle should be. In today's video, we're going to be exploring the price of Bitcoin, where Bitcoin's going, what the experts and bank CEOs are saying. Make sure you guys are subscribed to this channel. That way you never miss a new video. We upload every single day of the year to bring you the latest happening in the financial world. We got a lot to discuss in today's video. We're going to be starting right here. So let's get right into it. So Bitcoin's retail interest is almost nowhere to be found, according to this article, where they basically looked at where the money inflows are coming from. And we've been covering this on the channel, right? A lot of people, a lot of influencers, a lot of YouTubers out here are saying, but Cryptoviser, retail hasn't even joined the party. And I'm like, wait, hold on a second. Wall Street, specifically just Michael Saylor alone, right, and MicroStrategy, they're buying billions and billions and billions of dollars. Wall Street, over the last year and a half, has purchased over $120 billion in Bitcoin for the Bitcoin ETFs. And you're telling me that retail is going to outpace these purchases? That's completely ridiculous. And so a lot of people have been waiting for the top of the market, thinking that the top of the market's going to come when retail has joined the game. But I actually don't necessarily think that's the play this cycle, right? Even the conversation about, like when people who never talk to you about crypto or investing, they start calling you and asking you about Bitcoin price and when they should buy, that's kind of a top signal. And that really has not happened that much this cycle just yet. Maybe it won't, because remember what happened in the previous cycle. A lot of retail got burned through NFTs, through JPEGs, through Bored Ape Yacht Club, through FTX, through Celsius, Voyager, 3 Hours Capital, Terra Luna. I can keep going on and on. So a lot of people lost a lot of money. And even though maybe they got it back through bankruptcy proceedings and all of that, they're still burned. They still, like, the whole thesis around, well, crypto's a scam, that was kind of confirmed in the last cycle to these people. And their viewpoint hasn't changed yet, regardless of what Wall Street is doing. And so Bitcoin's leg up has been driven by institutions. Now, one of the ETF issuers, Bitwise, their head of research, said in an X post, Bitcoin is at all new all-time highs, but retail is almost nowhere to be found, pointing to the lack of Google search interest in Bitcoin, despite the asset setting consecutive all-time highs in the week, right? $115,000, $118,000, $119,000. The latest leg up is driven mostly by institutions. And this is obvious. The whole cycle has been institutional buying. This is why pretty much altcoins have not performed, including Ethereum, because up until now, Ethereum hasn't even been part of the conversation. It's been all about MicroStrategy, all about Bitcoin, all about the Bitcoin ETFs, all about, being the reserve currency of the world and all of that. But the rest of the market hasn't really been affected because Wall Street hasn't really shifted their focus. Now they're starting to do that. And now the Bitcoin maximalists are starting to get a little bit shaky in their thesis that we're never going to have a bear market, that we're only going to have a bull market, and that, all the purchasing is just going to be coming, right? I mean, most of these companies, like most companies, are not buying Bitcoin. It's very, very few companies in the grand scheme of things that are doing it. And most of them that are buying Bitcoin are Michael Saylor adjacent companies like, Jack Mallers 21 or Metaplanet or ProCap, which is Anthony Pompliano's Bitcoin acquisition company. But again, a lot of these companies are now announcing GameStop. GameStop bought. Their purchase price was, I think, $108,000. I mean, that's literally all-time record highs. Like, if we go into a bear market, what is going to happen to these companies? And then in the next cycle, it's going to be even harder to get more companies to want to put this on their balance sheet because they saw all those other companies potentially going into bankruptcy. We'll see whether that happens or not. I'm not rooting for that to happen, but it is definitely a possibility. Anyway, one Bitcoin commentator said, I think a lot of retail folks found out the price of Bitcoin is $117,000 and think, nah, I missed the boat, and don't even give it a second thought. Echoing that sentiment, Bitcoin Matrix podcast host said, at what Bitcoin price do you think retail wakes up? I'll go first. I don't think they're coming for a long time. Will Clemente, a Bitcoin maximalist, said, we still haven't even had any significant buyers that have come out publicly and announced that they have bought like Tesla last cycle, meaning like a major company like Tesla buying Bitcoin. This is hopium, but if we get a Bezos, Elon, or Zuckerberg come out and say, hey, I put 5% of my net worth in this thing, the media frenzy and retail wave will ensue. I mean, Elon definitely has money in crypto, that's for sure. Bezos, I would imagine, does as well, and Zuckerberg, right? Whether they're going to announce it or not, I don't know, and I don't think it really matters. This cycle is about Wall Street, and I've told my viewers in the last bear market and in the last bull market that once Wall Street gets involved with ETFs or just putting it on their balance sheet like MicroStrategy was doing in the previous cycle, said it was over. It was over for these 100x gains, and that's why people are still focusing on lower cap cryptos because they believe that we're going to still have the retail pump that we used to have. But as you guys can even see from the Bitcoin halving tracker, which shows the scaled up versions from previous cycles, every single cycle since the first one has had diminishing returns. There's still very good returns, right? Bitcoin was at 15,500 at the bottom. On this channel, we were buying when it was at 15,500. I actually just looked at one of my accounts the other day, and I have a Bitcoin buy that specifically around the FTX time that was $18,600. We are now at almost 10x that, right? 8x. That is a good return in any market that you look at in a very short period of time, right? You don't get that in the stock market. And so people are so bullish right now that they're literally like remortgaging their homes. I think it was Cardone Capital like refinanced some of their properties to buy Bitcoin at these prices. Now, granted, they're looking at this for much longer term. But if you're trying to lock in profits, I mean, waiting for retail, I think is a loser's game, because we're also hearing that the 4-year cycle is dead, right? We're hearing, oh, this time is different, this cycle is different, and it is different this cycle. But that doesn't mean that the fundamentals are changing. The next Bitcoin halving is happening around 4 years after this Bitcoin halving. That hasn't changed. And so the idea that we're going to not have a bear market, we're not going to have a corrective phase, we're not going to overshoot to the upside. This is ridiculous. This is absolutely ridiculous. And a lot of people are saying it and believing it too. So we know what the 4-year Bitcoin cycle is, and this is forming new all-time highs, followed by deep corrections. And this cycle is not dead, contrary to popular belief. According to Zappo Bank CEO in an interview with Cointelegraph, this bank CEO said that the risk of a prolonged bear market is still very real and does not need a cataclysmic event to trigger it. Things as simple as a general slowdown in news, developments, or routine portfolio rebalancing could cause the next market-wide downturn. Bingo, bingo. This is what literally we've been talking about on this channel. This is why it is crucial that you hit the subscribe button. We're going for 100,000 subscribers. I don't know if we're ever going to get there, but hopefully we are. With your help, giving this video a free thumbs up, hitting subscribe, appreciate it. Anyway, so here's the deal, guys. The Bitcoin narrative is exhausted, right? It's not over, but it's exhausted. Just like Tesla gets exhausted, Apple gets exhausted. I mean, how many times can a Tesla bull say, oh my God, well, robotaxi is going to change the world? It's like you've been saying that since 2019. We still don't have one robotaxi on the road. You know what I mean? Apple. Oh my God, Apple has the most revolutionary capabilities and technology. The next release is going to be the best. And then they're like, we have a yellow iPhone. That is our new release. And people are like, wow, go buy this stock. They have a yellow iPhone. It's like, who gives, you know what I'm saying? Like, it makes absolutely no sense. So these narratives get exhausted. And I believe Bitcoin, the narrative around it, is becoming exhausted. Again, like another company announcing that they're going to buy Bitcoin, or one company saying on X, oh, well, we bought 1 Bitcoin today and our new balance is 7.5 Bitcoin. It's like, are we really celebrating? Like, who does this? Nobody goes on X and says, I bought 15 shares of Tesla today. Hopefully Elon brings it forward. And like, nobody's saying that for any other asset besides Bitcoin. And so this whole narrative around it and the hype around all of these companies buying and the price is barely moving, it's getting exhausted. I'm not saying it's over, but it's getting exhausted. And this is why I think that we're starting to see rotations into the altcoins. But the cycle is not over. Don't listen to anybody who's telling you that this time is different, because they said the same bullshit last time. Last cycle, like after Jerome Powell said that they're raising rates, after the price was precipitously dropping, after all the markets were dropping, and I mean, people were like, oh no, we have an extended cycle this time in June of 2022. That's going to be the top of the market. This is the same bullshit that we're hearing this time, and that was actually the bottom of the market. We knew that on this channel. Everybody else, we kept buying the dips until we hit the bottom, and then they were like, oh, I thought this was going to be the extended cycle top. Nope, nope. That's not going to happen. Anyway, let's get back to this. So the Zappo Bank CEO said, we all want to think that Bitcoin is an inflation hedge. And I believe that it will be an inflation hedge one day, but I'm not sure we're there yet. I still see it very much as a risk-on asset. At least that correlation between Bitcoin, the S&P, and the stocks is still very much there. He said the contagion effect could be as simple as there's no new news in the market, causing the crypto sector to run out of steam in an organic, drawn-out process, according to the CEO. Yeah, that's exactly how the downturn occurs. Because we don't just go straight down, right? We're not going from 120,000 to 40,000 in a day. I mean, it could happen. But basically, typically what will happen is you start to like create a floor, right? Or a ceiling, whichever one you want to look at, where the price starts to stabilize out. And then people keep pushing like, oh, well, Bitcoin's going to get higher, it's going to go higher for sure. Look at all these companies buying, whatever narrative they can push out there to convince themselves in the market that the market's going higher. And then we dip. And then they say, no, you got to buy the dip. And so we could get a lot of volatility in those dips, right? Where it dips and then we go to a new all-time high. And then it dips and we go to a new all-time high. But that new all-time high is not being created because there's actual belief that the price is going much, much higher. It's just people buying the dip. And then as soon as they stop buying the dip because they either run out of money or the price starts moving higher again, the price drops again. So the more volatility you see, typically that means that the market is reversing. So if you're in a downtrend and then you start to see a lot of volatility, typically that means you're going to start to see an uptrend shortly thereafter. And if you're in an uptrend and then you start to see a lot of volatility, typically that means you're going to go into downtrend. This could last for months, it could last for years, it could last for weeks or days or hours, right? You don't actually know. And so the higher we go, the closer we are to that bear market. And that, I mean, that's just a fact. But there's a lot of people who will keep telling you, no, we're going to hit 400,000. So you keep believing that we're going to hit 400,000, then we hit 150. You're like, yeah, buy more. And so you're not only the exit liquidity, but you're the reason the price is going higher. Maybe not you specifically, but it could be Michael Saylor and all the bulls, you know, but at the end of the day, there's no new money coming in. And by the way, the risk here in this cycle is the fact that Wall Street is in control. Forget about MicroStrategy, because I'm just about to show you a video where Michael Saylor says they're not selling. But beyond that, forget about MicroStrategy. The Bitcoin, the Bitcoin ETFs, they have $125 billion. All they got to do is sell a little bit of that, 10% of that, and the market is going to crater. And people are like, oh no, BlackRock is not going to sell their Bitcoin. It's like, no, BlackRock is investing for their shareholders of the ETF. And so it doesn't matter what BlackRock wants, it's what their investors are doing. So yeah, the 4-year cycle is not done. Anyway, so many people are saying, oh, the institutions are here and therefore the cyclical sort of nature of Bitcoin is dead. He said, I'm not sure that I agree with this, and I don't agree either. Human psychology will never change. Cycles have nothing to do with Bitcoin and everything to do with people. The same boom and crash will happen this time. And I agree. It's just a matter of when, right? Because the more people get bullish, the more we see the fear and greed index go to greed, and the more there's profit taking. And then those people are going to get wrecked, and then we're going to go down to the fear, and the price is going to drop, and then there's going to be a lot of people that are going to buy that up, but not just yet. And remember, as Bitcoin matures, volatility drops, so expect slower climbs, according to experts, right? Again, there's more mechanisms to keep the price stable. So for instance, if the Bitcoin ETFs were to drop a massive amount of shares on the market, therefore selling Bitcoin, Michael Saylor can come in, or MicroStrategy can come in, or one of these other Bitcoin treasury companies and buy that Bitcoin to keep the price stable. But we don't know that that's guaranteed, right? And we don't know that that's definitely going to occur. So yeah, there's a lot of bulls here, including Michael Saylor, who's saying he'll be buying the top forever. Bitcoin is the exit strategy. I want you to listen to this video. And while you're listening to the video, I want you to think to yourself, is this a good investment strategy? And I'm not saying for him, I'm saying for you or for the normal investor. Because you have to remember, Michael Saylor and MicroStrategy, they are not you. They're not an ordinary person, right? MicroStrategy is a corporation. So if the corporation goes down and all the shareholders lose money, yeah, he may get in trouble, but it's not really going to affect him the way that his own portfolio is. And this is really important for you to understand. Like, he's playing a different game, right? These companies are playing much larger games. They have much longer time horizons. They have a lot more money they can play with that they can afford to lose. Or maybe they can't afford to lose, but they're not worried about paying their bill. Like, they're going to be able to pay their bills. Like, you have to pay your bills. You have to protect your future. You have to protect your financial future and retirement, right? A corporation doesn't have to do that. Corporations go bankrupt all the time. Corporations go under all the time. Corporations fail all the time. They also succeed. But I want you to think about the thesis of buying the top forever. This is not for you and I. This is for corporations. Let's listen to what he says. Forgot to turn on the audio. Let's start that again.
Let's talk about your existing holdings. As I mentioned in the intro, now worth around $10 billion. You have paper gains of about 70% or so, which a lot of people would like to see that sort of return. At any point, would you sell? When would it make sense to take profits there?
Well, I've famously said I'm going to be buying the top forever. Bitcoin is the exit strategy. It is the strongest asset. So what we see right now is that Bitcoin has just emerged as a $1 trillion asset class. And it's alongside names like Apple and Google and Microsoft. But the difference between Bitcoin and the Magnificent Seven is Bitcoin's an asset class. It's not a company. There's not enough room in the capital structure of those companies to hold $10 trillion or $100 trillion worth of capital. So Bitcoin's competing against gold, which is 10x what it is right now. It's competing against the S&P index. It's competing against real estate, $100 trillion plus asset class as a store of value. So we believe capital is going to keep flowing from those asset classes into Bitcoin because Bitcoin is technically superior to those asset classes. And that being the case, there's just no reason to sell the winner to buy the losers.
And listen, his thesis is accurate if you're thinking about the much longer term. Because I do believe that I just showed you the debt clock, right? They're going to keep printing and printing and printing and devaluing the dollars. And this is going to, when you're looking at the price of Bitcoin in dollars, increase. But this is over the course of time. It's going to take much longer than most people are anticipating. And these corporations, they're thinking about, decades down the road and what they can do with the Bitcoin as it becomes more integrated into traditional finance. But this all happens very slowly. And so for the average person, this is not a good investment thesis or strategy, specifically taking out debt to buy more Bitcoins as well. Because at the end of the day, there is rotations occurring, right? We're starting to see a lot of focus being put on Ethereum and the Ethereum ecosystem, including Chainlink. Chainlink said, we are excited to be the infrastructure partner alongside Chainlink, this is Zero Hash, and MasterCard on the Swapper Finance platform. So effectively, Chainlink announced that Chainlink and MasterCard have partnered to enable billions of cardholders to purchase crypto directly on-chain. Chainlink will verify and synchronize key transaction details to enable MasterCard holders to access crypto directly on-chain. This marks a major step forward in the mainstream adoption of Web3. Chainlink and MasterCard power the new Swapper Finance platform with Zero Hash, providing on-chain service and access to liquidity needed to convert fiat into crypto with seamless smart contract execution alongside these other companies like Uniswap. And so the payment networks are getting involved. Chainlink is the connector with on-chain and off-chain, which is also getting a lot more focus. And really, this comes down to DeFi and the Ethereum, I would say the Ethereum-driven ecosystem, right? Real on-chain finance, real integrations with TradFi, real usage, not fake usage. Because remember, a lot of these chains have fake stats, a lot of them. Like if you think about Hyperliquid and you look at Hyperliquid, okay, this is a DEX, right? There's no reason that a DEX should have a $16 billion valuation above some of these protocols like Chainlink, like Hedera, like Internet Computer, like Polygon, that have real world integrations. But even if you forget about some of those, right? Ethereum, Polygon, Avalanche, Chainlink, these are all Ethereum or Ethereum adjacent or Ethereum layer 2 ecosystem for DeFi. These are purpose built for this. They have real on-chain metrics that show growth in the ecosystem, active addresses, stablecoin payments, stablecoin usage. And by the way, stablecoin usage from a regulated stablecoin like Tether or USDC, this shows real volume and real money transacting. This is very different than what we see in other ecosystems like Bitcoin. Bitcoin is a store of value. That's what it's being bought and held. That's it. It's not being used for anything. And so when we see Chainlink doing this, when we see Ethereum, right, what has Wall Street done? They're now focusing on Ethereum. And this doesn't mean that the Bitcoin trade is over forever, right? But the Bitcoin trade is exhausted. Like, people look at this, like smart people with like no FOMO and not getting their emotions involved in investing, which is a lot of people. They look at this and they say, I am not buying Bitcoin at $118,000. Forget about, maybe I own Bitcoin and I'm not going to sell it, but new money, right? Because if you're getting paid every week by your employer and you're investing on a regular basis, are you going to keep investing in Bitcoin at $118,000? Or are you going to say, wait, everybody's focusing on Ethereum now. Everybody's focusing on DeFi. Everybody's focusing on TradFi connecting with DeFi, with payments, stable coins, on-chain finance, all of this stuff. Why would I not switch to Ethereum? And so that doesn't necessarily mean I'm selling my Bitcoin, but I'm no longer buying. So the inflows are shifting to ETH, to maybe XRP, to the Ethereum layer 2s, adjacent chains to Ethereum, things like that. That's, I mean, even Robinhood chose Arbitrum, which is an Ethereum layer 2, so that effectively they're settling on Ethereum, utilizing Arbitrum. So how is this not getting the excitement and the narrative shift? Well, I think that we're seeing it. This is the beginning stages of it. And maybe this is when retail is going to enter the game. Because a lot of retail, again, they either got burned in the previous cycle, they think that they're playing. You guys have to understand, like, an everyday person looking at $118,000 Bitcoin, even if they can buy a portion of it, this is very intimidating. Very, very intimidating. Because we're looking at $118,000 here, but they're looking at, like, well, if I put in 1/100th of a Bitcoin, I'm going to have $1,000 of Bitcoin. So Bitcoin goes to 200,000. To them, it's really not that big of a deal, right? I don't know if it's worth the risk when they look at this number. And this is a psychological thing, right? More than anything, because we understand that really it comes down to market cap and what the value of the underlying chain is. But this happened in the previous cycle also. One of the reasons that I told you Cardano would perform in the previous cycle, besides a lot of anticipation for smart contracts, the staking ecosystem, which they did an excellent job at, but it was because of the price. Because the price was like, around 10 or 20 cents in the previous bear market. And so people would go down the list, like new investors. They'd say, this is too expensive. This is too expensive. XRP is maybe good. Oh, Tether, let me buy Tether. Like, they don't even know what it is. They're just buying it because it's the cheapest thing, right? And so when you really go down the crypto list, I mean, if you look at 118,000, this is intimidating compared to 3,000, right? Somebody may be able to stomach 3,000 versus 120,000. And so retail is not even, I don't even think, going to be a player ever again in Bitcoin, right? It's going to be Wall Street. And maybe they're going to be investing in like Bitcoin ETFs or Bitcoin funds and stuff like that. But the number, the dollar amount is so overwhelming to the majority of people who have no investments or don't know anything about crypto. They're just not willing to do it anymore. And so it's going to be very interesting as the Ethereum conversation picks up, right? Tom Lee has been really one of the main drivers of this, with his becoming chairman of the board of BitMine Immersion Technologies, which is going to be a Bitcoin treasury company. We know SharpLink, BTCS, Bit Digital. These are all companies that are on the stock market that are switching to Ethereum strategies. And I think if we are going to see retail, it's going to be in this shift away from Bitcoin into alts. And this is where some plays may be here that could be very lucrative, right? Forget about these even top 50, right? It's going to be these small coins, like maybe the PP coin, that have very low dollar amounts. If retail enters the game, I don't even know that retail is going to be entering the game or at scale that we saw in 2021. But if they do, they're going to choose PP coin. They're going to choose, GFI, Goldfinch. They're going to choose PAL AI, because all of these have very, very low dollar amounts. And retail, where's the AI section? A lot of retail investors, that's how they look at it. They're just like, oh, the AI cryptos, too expensive, too expensive, too expensive, too expensive, too expensive. Oh, artificial superintelligence, it's under $1. Let's buy this, right? It's just a speculation. They'll go down here and say, oh, the graph is 10 cents. Let's buy the graph. So that's kind of what I think is going on here with the rotation in the markets. Now, I could be wrong on this, but I really love to hear your thoughts on it, whether we're seeing the transition away from Bitcoin into Ethereum, and those people who may have missed out on Bitcoin are potentially going to get into the DeFi trade. So let me know what you guys think about that. But Arthur Hayes is now saying, I was slightly bearish in my last essay due to the TGA refill. What changed? Well, Bitcoin busted through all-time highs on good volume, and Ethereum is following and will outperform. Get ready for monster alt season. He said the market thinks Trump will taco, which is Trump always chickens out on tariffs, meaning he'll end tariffs. So F it. Maelstrom Fund is backing up the truck. And so here's the deal, guys. I agree partially with what Arthur Hayes is saying. Bitcoin, I don't know. I don't really care at this point how high it's going, because I don't think it's the play anymore, at least right now. this could change, right? If DeFi and Ethereum ecosystems and everything else, like let's say we have alt season and some of these alts go up 5, 10x, okay? Let's just say this happens. Let's say this happens before November or before October. So over the next 30 to 60 days, we start to see alt season 5, 10x, maybe more, but let's just say 5, 10x. What I think will then occur is then once we 5 or 10x, people will start taking profits on these alts, because a lot of people I think are also going to be nervous about the fact that we're not really seeing, 100, 200, 1,000 X's like we saw in previous cycles. And the fact that we're, at the end stages of the Bitcoin halving cycle based on the halving tracker, I think that people are going to be taking profits fairly early. That's just my opinion. So if that happens, right, alt season, 5, 10x before October, people start to take profits. So Bitcoin goes down, altcoins start to go down. Then I think we're going to see the rotation back into Bitcoin after alts. We'll probably see a little pump in Bitcoin. Then there'll be a sell-off again, probably back into alts, sell-off again, and then it's over. And this could happen very, very quick and rapid. So that's kind of the way that I see it. But every time that we take a dip, the next high, in my view, in my what I'm going to be anticipating is a lower high. And so that's what I'm going to be looking for. The more higher highs we get, the more that I'm going to be looking for lower highs, right? People are going to say, Cryptoviser, you're going to keep being bearish the more bullish the market looks. Yeah, exactly. That's exactly what I'm going to do. And then as we get into a bear market, the more bearish the market gets, the more bullish I'm going to get. Opposite the market, opposite the fear and greed index. Based on what I'm seeing in this cycle, that is the focus, right? And so, yeah, I don't know what they're going to be doing from a tariff situation or whatever, but I do know that the administration, generally speaking, is very pro-markets and pro-crypto and wants these markets to go higher. And so I'm pretty sure they will over the course of time. Anyway, moving right along, Jim Chanos is also kind of raising some of the red flags about where we are in the cycle. He said, we're getting to the point where Bitcoin treasury companies' equity raises, meaning selling shares to raise money, are becoming material amounts, 10% of the entire U.S. savings rate of $100 billion per month. Think about that. That means they're printing 10% of the U.S. savings rate every single month. And he said at the peak of the SPAC issuance, right? These are special purpose acquisition companies like merger companies to become publicly traded much easier. SPACs raised about $180 billion for the LTM through the second quarter of 2021, or $500 million per day. The Bitcoin treasury companies' raises are starting to get close to that level. And so you can see here, just a few years ago, this wasn't like, decades ago or centuries ago. This was just a few years ago. It says in Q4 of 2021, SPACs raised a total of $31 billion in capital from IPOs across 210 transactions. The volume of proceeds raised from these SPACs in 2021 increased 99% from 2020, right? Doubled. And total transactions jumped 69% year over year. And so you saw massive SPAC acquisitions, right? IPOs. And then what happened after that? 2022 was a bear market for pretty much all the markets. And so you have to understand, like, the Bitcoin treasury companies alone are getting to this level. And they're all buying the top of the market. Some of them are starting their acquisition strategy at all-time record highs. And I told you guys, the more signals I see in the market that tell me, this is not good, the more signals of where we are in the cycle for me. And it's confirmed by the Bitcoin halving tracker. You guys can see I've covered this extensively. This bottom black line. I mean, we're starting the final leg up. You know, as we approach the previous 2 cycles, you know, time frames for all-time record highs and the top of the market. And that's why I already called the top of the market, right? Whether we're at the all-time record high peak or not, I think generally speaking, within the next, you know, 30, 60, 90 days, that's it. We're going to be peaked out. And you don't want to be at the top of the market trying to sell your coin, because when everybody's trying to sell at the same time, that's when the market starts dropping precipitously and you won't be able to get out. So when the liquidity is flowing, you want to get out of the market. And right now, the liquidity is flowing. A lot of money regularly is entering the Bitcoin space. A lot of these are private transactions. A lot of these are whales or early investors or large corporations just transferring the Bitcoin and getting cash. It's the wealth transfer. It's underway. It's the same thing that happened in 2021 when the Federal Reserve and the Treasury Secretary were telling us, no, there's no inflation. It's just transitory. It's totally transitory. And of course, over the course of time, inflation is transitory, right? Because we're not going to be at very, very high inflation consistently forever. But transitory, what they were saying at the time was implying, oh, don't worry about it. It's not a big deal. When it was. And it was underway when they were telling us it's transitory. When they were telling us it's transitory, Bitcoin was spiking because Bitcoin was pricing in where we were and the lies that we were not having inflation, even though when we found out the number, because remember, inflation data lags. And so year over year numbers, you're not going to get until next year. And so if prices next year show 9% inflation, that means the inflation is ongoing now. And that's exactly what we saw. And so 2021 was the inflationary period. That's why the prices were going up. Right now is the inflationary period. The prices are going up. This may not be it, but for this point in the cycle, that's where we are. And so the transition away from Bitcoin into alts, and then back into Bitcoin, and then back into alts, and then eventually people are going to pull their profits out, and they're probably going to put a lot in stable coins because they're going to earn some interest. But a lot of people are like, but Cryptoviser, what if the Federal Reserve lowers rates? Well, if the Federal Reserve lowers rates, typically after they lower rates the first time, the market drops precipitously, because that's the Federal Reserve saying we need to liquefy the economy, which means the economy is not doing well. We know that it's not necessarily doing well, but they're not confirming it by lowering rates. And so when they lower rates, the market is going to pump very, very rapidly, very, very fast. And I'm talking about major cuts, right? Not 0.25%. The market will go up, but 0.25% is not going to do anything, right? It's not going to materially change the economy or the markets. And so a lot of people are just like, they're relying on something else, right? Oh, these companies will keep buying Bitcoin. Oh, the Federal Reserve will lower rates. Oh, they'll buy Bitcoin in the strategic reserve. And it's like, all of these are what ifs. And all of these are hoping and relying on somebody else to make you rich. And that is always a bad decision in my view, right? It's like, there's a lot of people who will have a financial advisor who's probably not a millionaire. And it's like, if they're not a millionaire, why are you having them manage your money? Like, I want a millionaire managing my money, or a billionaire managing my money, right? So when I'm looking at the market and I'm seeing all these things, we're going to buy the top forever. We're going to keep taking out debt. There's going to be no downturn. Don't worry about it. It just brings me back to 2021 when they said inflation was transitory, and we knew it wasn't. We knew it wasn't. Michael Saylor, he said he's going to buy the top forever, and he probably is. Like, I'm not discounting that he's going to buy the top forever. But that doesn't mean the market's not going to correct. That doesn't mean the market's not going to turn a downturn. It doesn't mean we're never going to have a bear market again, because he has to keep buying more and more and more and more. He can never stop, and it has to ever increase. And he has to keep the narrative going and hope the debt, because when debt becomes cheaper, which it will if the Federal Reserve lowers rates, you don't want an entire company to be propped up through debt to purchase an asset that could be liquidated at some point. They're saying they're not going to liquidate ever, and they're never going to sell any. And that may be true because they may be too big to fail at this point. But what if they do sell some? What if they have to? What if the price of Bitcoin goes down to $20,000? There's a lot of people say, but Cryptoviser, we'll just keep buying. You may not be able to. Because if we go down to $20,000, that means that all the markets probably cratered. Because, again, Bitcoin is very highly correlated with the stock market and has been. People who are saying, oh, no, there's no correlation, they haven't been paying attention for the last 5 years because it is very highly correlated. So if Bitcoin drops to 20,000, what do you think is going to be happening in the stock market? And Bitcoin is the safe haven. So if they get margin called in the stock market, they're not just going to get margin called. They're going to sell their Bitcoin to cover those calls. And so it is connected. And the more that it gets integrated with traditional finance, the more we're going to see correlation with the ups and downs movement. But the Bitcoin cycle is not done. The Bitcoin cycle will always continue on a 4-year path from halving to halving to halving. The dynamics in between will change, but the halving cycle will not. So this is very important to understand because the same narratives that we're hearing this cycle were in the last cycle where FTX, oh yeah, you know, FTX is going to be the best exchange in the world. And people are like, wow, you're a genius, Sam. I remember, like I was just talking to somebody about this the other day. Like the way that I knew we were in big trouble in the markets last cycle was when I was watching Bloomberg and, you know, Sam Bankman is having an interview with them while he's playing video games on a beanbag chair. And then they cut away from him and they're like, wow, he's such a genius. And I'm like, he literally didn't say anything in that whole interview. He was playing a video game. He didn't say anything about their business, how they're making money, how they're valued at what they said they were valued at, how they had no impact from all of the macro issues that were going on with borrowing and lending platforms. That's how I knew it was the top. And this cycle, I know it's the top because everybody's saying that it's not the top when we are literally at the top. Like we're at the all-time record highs and people are like, the bull market has just begun. It's like, what? The bull market has, and I'm talking about like influencers, guys. They're like, wow, the bull market has just begun. We just hit new all-time record highs. The bull market just begun. I'm like, no. This is like the 5th time we've hit new all-time record highs. That means that we've been in the bull market. And by the way, we've been in the bull market since 2023. And so everybody's focused on what they think is the cycle, not looking at the actual cycle. The halving tracker, go on X, follow them on X. It updates every single day. We have up until 550 days. That is it from, in my view, which is 100 days. That's on the long end. On the shorter end, we have about 520 days after the halving, which puts us at about 70 days, right? So we're at about 2 to 3 months until the cycle is effectively going to reverse. And by the way, it could happen earlier. It could happen later as well. But based on where we are this cycle, where we were last cycle, all the other things that, you know, the other indicators that we've seen in the markets, I think the rotation is underway into ETH, DeFi, and all the layer 2s. And it's going to be very interesting to see how it all plays out. Let me know what you guys think down below. Don't forget to give the video a free thumbs up. Also hit the subscribe button. I will see you when I see you. Invest responsibly. And as always, crypto on.